Gold is bottomed out. Silver is bottomed out. I would be a big buyer. This is a massive head fake. I know I didn't expect it. Not that many people expected war with Iran to result in a big drop in the price of gold, because war with Iran is bullish for gold. And that hasn't changed based on this sell-off. It's still bullish. In fact, the longer the war goes on, the more bullish it is. But the way the markets have been trading, if the war ends on Monday, gold's going up several $100s on Monday. Because right now, everybody is focused on interest rates in the Fed. That's what got gold prices going down, the idea that the rate cuts were on hold. And now they're talking about rate hikes. But it doesn't matter if the Fed cuts rates or not. What matters is inflation is soaring, and so real rates are plunging, and the Fed is not going to hike. And even if it does hike, they're talking 25, 50 basis points. They would have to hike several hundred basis points to close the gap between inflation and interest rates, which they can't do.
Gold and silver appear to be stabilizing after a sharp and unexpected decline, creating what may be a powerful opportunity for long-term investors. Despite geopolitical tensions that would traditionally support higher prices, short-term market reactions driven by interest rate expectations have temporarily pushed metals lower. However, the underlying drivers, persistent inflation and negative real rates, remain firmly intact, suggesting that this move could be a misleading shakeout rather than a true trend reversal. PeterSchiff, a well-known economic commentator, explains that the market is currently mispricing gold by focusing too heavily on Federal Reserve policy. Even if rate hikes are discussed, they are unlikely to match the pace of inflation, meaning real yields continue to decline, a fundamentally bullish condition for gold. He emphasizes that geopolitical risks, especially prolonged conflict, only strengthen the long-term case for higher prices. Now, we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Who knows where gold's going to go? I mean, 10,000 will be cheap, 20,000, who knows? But the dollar's going to go through the floor, gold's going to go through the roof. And so I think the sooner that you could buy. So again, as I've been saying, I know I didn't anticipate this big drop, but you know what? There's an expression about a gift horse, and don't look this one in the mouth. Don't ask any questions. Just take advantage of it, because it won't be long before people realize what's happening here and how bullish this is for gold. And there may have been some countries or somebody that needed to sell some gold right away because they had to stock up on oil, or I don't know what happened to drive a rush for liquidity. But the war was very disruptive right away. Nobody obviously expected it, right? It was a surprise that we just started the war, even though we had been building up our truth strength, in the region. I don't think people were prepared for that. In fact, obviously we were in the middle of negotiations, so the Iranians probably thought it was just a show of strength while they were negotiating. And in the meantime, we just started bombing them. But this war is not going to go the way the president plans, just like nothing goes the way the president plans. I mean, I don't even know if they have a plan. I think they're just flying by the seat of their pants, and they're just winging everything, and they're just putting out posts on Truth Social like trial balloons, and they're seeing what happens to them. And the last one, right, went down like the Hindenburg. So I don't know how many more trial balloons they're going to be floating there. But in the meantime, this is a great opportunity. It's a great opportunity to buy more gold and silver. It's a great opportunity to buy these mining stocks, which had an even bigger pullback. A much bigger pullback. Now, I know that higher oil prices are going to be a negative for the gold mining stocks. I mean, but when oil was so cheap, it wasn't really a positive. The market never really credited the mining stocks for just how cheap oil was. So I don't think that they have anything to give back now that oil isn't cheap at $100 a barrel. But gold prices and silver prices are going to keep on rising. And the top line revenue is going to be more important than that line item. Yes, all else being equal, it would have been better for gold stocks if oil was still $60. But even at $100, there's still a steal at the current prices. In fact, I think there's still a steal at the prices they were at a month ago before we had this 30% pullback on the war. So again, take advantage of that too. Don't just buy gold and silver from Schiff Gold. And don't forget about T-Gold. If you're a Schiff Gold customer, but you're not also a T-Gold customer, make sure and set up your account and buy a little T-gold and start building up your account so you have some gold that you'll be able to use as money, as a medium of exchange. Because in the years ahead, when we have massive inflation and it becomes difficult to deal in dollars, and more people don't want dollars, they want an alternative to the dollar, the number one alternative will be gold. And the most convenient way to trade in gold will be through online, through tokenized gold or through platforms where you can move the ownership of gold without moving the physical gold. You have the physical gold nice and safe in a vault, and all that has to change hands to have commerce is the ownership of that gold. And whether it's through a token or any other means, we have the technology to make engaging in commerce and paying and being paid in gold easier, more efficient than it's ever been in the past. See, people keep accusing me when I don't want Bitcoin, I like gold. I say, Peter Schiff, you're living in the past. No, I'm not. I'm living in the future. Gold is the future. Soon, Bitcoin is going to be the past. Bitcoin has no future, but gold does. It has a very bright future.
The recent drop in gold and silver prices is being viewed as a temporary dislocation rather than a shift in long-term direction. Despite the unexpected sell-off triggered by geopolitical shock and liquidity stress, the broader macro environment continues to favor higher precious metals prices. Inflation remains elevated, real interest rates are deeply negative, and currency confidence is weakening, conditions that historically drive gold significantly higher over time. This pullback has opened what many see as a rare entry opportunity across both physical metals and mining equities. Even with rising energy costs, which can pressure mining margins, the impact is outweighed by the strong upside in gold and silver prices. At the same time, evolving financial infrastructure is making gold more usable in everyday transactions, from digital ownership systems to tokenized platforms. As global demand shifts away from fiat currencies, gold is increasingly positioned not just as a store of value, but as a future medium of exchange. Let's get back to the interview.
I'm sure something's going to happen, but I'm also sure that it's likely to be another lie. But there could be a lot of volatility. But again, I think gold is bottomed out. Silver is bottomed out. I would be a big buyer. This is a massive head fake. I know I didn't expect it. Not that many people expected war with Iran to result in a big drop in the price of gold, because war with Iran is bullish for gold. And that hasn't changed based on this sell-off. It's still bullish. In fact, the longer the war goes on, the more bullish it is. But the way the markets have been trading, if the war ends on Monday, gold's going up several $100s on Monday. Because right now, everybody is focused on interest rates in the Fed. That's what got gold prices going down, the idea that the rate cuts were on hold. And now they're talking about rate hikes. But it doesn't matter if the Fed cuts rates or not. What matters is inflation is soaring, and so real rates are plunging, and the Fed is not going to hike. And even if it does hike, they're talking 25, 50 basis points. They would have to hike several hundred basis points to close the gap between inflation and interest rates, which they can't do. In fact, let's look at what's happening in the markets that are going to be putting a lot of pressure. The Dow had a bad week. The month is not quite over yet because we still have a couple of more days left of March, early next week. But the Dow was down 2.3% for the week. S&P down 3.5%. Even worse, the NASDAQ, the tech-heavy NASDAQ, crushed by 4.7%. Now, all the major indexes now are at least 10% below their highs, so that's official correction territory. I think if the war continues for another week or two, we'll be in bear market territory. And it could continue for a lot longer than that. But even if we declare victory and basically surrender, but turn it into the greatest victory in the history of warfare, oil's not going to collapse. It'll go down, but it's not going back down to where it was. And we still have to pay for what we blew up, and we may have to pay to rebuild. In fact, Trump, after that Truth Social post, he sent some kind of peace plan to the Iranians. And the Iranians basically flat out rejected it and submitted their own terms, which amounted to unconditional surrender by the United States. So the two sides are at polar opposites. They're entrenched in positions that are complete non-starters to the other side. Now, Trump says we've been having all these negotiations, but based on the positions of the parties, they couldn't have possibly negotiated because their positions now are where you are before you negotiate. Nobody has compromised a nickel. Each side is, I get everything, you get nothing. So there's no negotiations when that's where you are. You're posturing to potentially negotiate, but the negotiations that Trump claims are going great likely have not even started. In fact, before Trump claimed that there was successful negotiations, he said he didn't want to negotiate, that there was no one to negotiate with, that they were all dead, right? But anyway, so gold, as I already mentioned, was up. Gold was up 2.2% on the week, approximately. Silver up about 3.3%. And gold stocks had a bit of a bounce. The GDX was up 4.5%, bucking the trend of lower stock prices overall and rising. And so next week, though, I think could be an even bigger week, especially if gold continues to follow through. And I think, gold is going to rise as rapidly as it declined, maybe even faster, as people realize that they've got this whole thing wrong, that the war is not bearish for gold, but bullish. I think we're going to see a bigger move as investors really come to terms with just how bullish this is. Oh, yeah, I was talking about the cost. So I was watching Scott Bessent, and I did mention this on the other podcast. He was on Meet the Press over the weekend. And when he was asked if you're going to raise taxes to pay for the war, his response was, that's a ridiculous question. How could you ask such a stupid question? Of course we're not going to raise taxes to pay for the war. So how are they going to pay for the war? With bigger deficits, with money printing, the way they pay for all wars now. And so that's bullish for gold. In fact, the national debt is going to rise in 2026 by a larger amount than it did in any year that Biden was president. In fact, consumer prices, the CPI, is probably going to increase in 2026 by a larger amount than in any calendar year under Biden. In fact, again, look at the import-export prices for February. They skyrocketed, annualized to about 18% inflation. That was before March. The war started March 1st. Oil prices have gone up 50% this month. None of that was in the February numbers. And if you remember, the big inflation of the Biden era, the first sign of it was in import-export prices. And I kept pointing that out on my podcast. I kept saying, forget about the CPI. Look at these import-export prices. This is where it happens first. You're going to see it in the producer price. You're going to see it in the consumer prices. And I was right. And the Fed was completely wrong to ignore it. The same thing is happening again. We're going to have a surge in consumer prices, but it started with the import and the export prices, which are not manipulated. There's no hedonics. There's no substitution. They're more honest prices, and that is what is going on.
The recent pullback in gold and silver is increasingly being interpreted as a temporary distortion driven by liquidity stress and misaligned market expectations. While short-term price action has reacted to shifting narratives around interest rates and geopolitical developments, the broader macro foundation remains firmly supportive. Inflation pressures are building beneath the surface, fueled by rising energy costs, expanding fiscal deficits, and accelerating monetary expansion tied to ongoing conflict dynamics. Markets may still experience volatility, especially as equities weaken and uncertainty persists, but the underlying trajectory for precious metals appears intact. The current environment reflects a disconnect between perception and reality, where investors are focused on policy signals rather than structural imbalances. As those imbalances become more visible, gold and silver could reprice rapidly, potentially reversing recent declines at an even faster pace. This phase may ultimately be remembered as an accumulation window before a stronger upward move resumes. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by liking this video and subscribing to our channel for more financial insights. Don't forget to hit the notification bell so you never miss an update. Thanks for watching.